All right, guys. Angelo, Christian, thank you so much for checking us out. And today we're talking about Houston as the next hottest market. And a couple things I want to go over that went out there. We're looking at, my company is an investment company. We're looking at making investments in the Houston market for multi-unit family apartment complexes. So for the next 12 months, we're looking to purchase up to 100 units of apartments. And I'm going to start touring the city for looking for investment opportunities. So if you're out there and you're looking and you want to get part of this fund that we're raising for $30 million to take down Houston apartment complexes or construction for the next 12 months, we're going to be running shows. We're actually tour different apartment complexes and talk with brokers and look at deals to see if there's any great opportunities out there in the Houston market. So it's a really hot market right now in Houston, and we actually have some stats we're going to show you up on the board today. The average list price in Houston right now is $350K. The average sales price is $200K. There was only 2,000 foreclosures in 2016, a very low number, and the appreciation rate is like at 3.8%. So we're still seeing that homes are very affordable, inventory is moving, and if you think about it, compared to like LA or New York, it's a hell of a deal, great value play to invest in Houston for the long term. In fact, the reason why my investment company is doing this real estate fund in Houston, because we really believe that Houston over the long term will be one of the greatest cities to invest in from an ROI standpoint. So we really love apartment complexes and multifamily. So that's where our asset allocation is going to be going. We're real big about trying to find larger apartment complexes, at least, a 40 to 50 unit complex and bigger with a good NOI. So if anyone's out there and you want to get involved with this, reach us out at 832-431-6331. Or you can also send us an email. There'll be information down at the bottom of our channel here next week that we're going to be touring and walking through and seeing if we see anything attractive. If we do, we're gonna make an investment, make an offer, and take it down. So, but like I said, I don't know where you're at. If you're looking at markets, you're looking at good opportunities. Houston really, if you check the stats from what I'm seeing. From the risk to reward, the net operating income of some of these apartment complexes, and just the long term. I mean, real estate apartment complexes tend to double in value every 8 to 12 years. So now would be a great time if you can buy, a 40 or 50 unit complex for $3 to $4 million, and in 10 years, that thing could be worth $8 to $10 million. And you're collecting the rents on it too to pay down the mortgage. So really good opportunity, and it has great cash flow. I mean, that's really what I think one of the great things about apartment complexes, if it's in a great area, and that's one of the key things is location. We want to make sure that we're buying in a great area, and that's something that we're going to be looking at scouting out with our brokers that we have, our preferred broker. So anyway, Houston is a very hot market, and if it's something you're interested in, call us or send us a message. And come with us next week and over the next 12 months as we go and check out deals and see if we can find a great deal to buy. I have one on my eye on the Galleria right now. It's about a $2.2 million deal, and it has like a 14% cap rate. And so looks interesting. It's a little smaller, but it's in a great location by Montrose. So I really like the deal. I'm going to go walk that next week. You guys come with us and we'll go over it and kind of, analyze it and tear it apart and see if it's worth it to make an offer. So, and so this is a property that I had flagged about a couple days ago and mentioned to you that we're going to go through it and look at the location, the cap rate, and the NOI, and see if it's something that we should actually engage in. And you'll actually see this up on your screen and kind of take a look at it here. I'm going to break down the numbers, explain some things, and see what we think if it's something that we should actually make an investment in. So we'll kind of look at, this is a really nice place in the Galleria. If you guys aren't familiar with Houston, the Galleria is like the hottest area. Montrose, Galleria, River Oaks, the best place to be in Houston. And so remember, the purpose of this is we're looking at investing in multi-unit family apartments to collect cash flow, and investing in real estate is, obviously it's a no-brainer. It's one of the best investments that's been going on for thousands of years, investing in real estate. And so, and multi-units are a really great way on how to generate income. And depending on your portfolio, if you have stocks, bonds, it's good to diversify and have something else in there, like real estate, like apartments. I like apartments. I don't like commercial or new construction. I think there's a lot more risk involved. People are always going to need to have a house and need somewhere to live. So, apartments is something that I'm really starting to take a serious, more interest in. I have a small amount of apartments so far, and I'm looking to build that up. And I'm not sure right now if once we go through the numbers, if this one's going to make sense. We're kind of go through it now. You can take a look. The outside actually looks very attractive. It's a 14 unit. It's got, a nice urban look for the Galleria, and if we can scroll down, you see it's got outside patio. It's got all brand new stuff in the inside as far as stainless steel appliances. Looks like it's got a nice flooring. It's clean. It's looks spacious. Here's some of the information on the property that we can kind of take a look at here, and you'll see this on your screen. So it's 14 units. It was built in 1964. It was remodeled in 2014, and it's 100% occupied. That's obviously a good thing. So some of the key things that you're looking at when you're investing is obviously location. And so the first thing that I look at when I'm investing in real estate is, obviously the location. It's in a great area. It's right outside of Montrose, really hot area, like in downtown Houston. You can't ask for a better spot than that. If you guys are in Houston, you know it. It's a really, really great area. It's always going to be here. Probably 50 years from now, 100 years from now, people are going to need a house to live. And that's a great place you want to be. And the great thing about Houston, I think, what are they asking? $2 million for this, Chris? Was it 2.1 million? And it's a 14 unit. So, I think is that the price?
I think so.
Okay. So they're wanting about $150,000 a unit. Something like this in LA would probably be about $500,000. San Diego, $1 million a unit. New York, definitely $1 million, $2 million a unit. So, and I know that Houston's not there, but one day I really believe that it will be. I think Houston is a great value play, a great opportunity. So they're wanting $150K a unit. And to me, we got to look at it and see if it makes sense. So it's 14 units. Here's how it's broken down. The units are 576 square feet. He's collecting $11.95 rent on these. Some of these are $13.25. I mean, basically, the aggregate comes out to $208,000 a year. And so let's just kind of take a look at this. He's got a vacancy loss factor in there of 7,100, and then some other income. He's got net revenue, let's just say $200K. So let's take a look at it. So they're asking $2 million. Okay. It's got revenue, 200K, right? So, let's take a look at the expenses real quick. What are the expenses here? So he's got management fee. He has some type of HOA, or not HOA. He's got a property manager. He's paying them $12,500 a year, and a bunch of other crap. Taxes, 23K. Insurance, 11K. Total expenses, 70K. Net operating income, 134K. So, and then you see this thing called cap rate. Everyone, if you don't know what cap rate is, we can talk about that. And that's basically what the return is. And so, they're asking 2.156 mil, and it's getting a return of 6.25%, the cap rate. So, you have to think about this. and see if the deal makes sense compared to all other options, right? That's what opportunity cost is, and compared to investing in stocks, your business, um, other things out there, Bitcoin, whatever else is out there. So, and also the risk to reward is very, very important. And so I would say that on a risk to reward, that this has a low risk compared to other things that have very high volatility. And so that's something that I would think that if you already have a very risky portfolio, that you want to plug something like this in that has low risk. So I would definitely think apartment complexes are low risk if they're in the right area. So we have on a scale of 1 to 10, I'd say we have, 10 for location, risk. I would say that it's a very low risk out of 10 being the most risky or volatile, and 1 being, a treasury bill. I think that, this would probably be, probably, let's just say a 4, a lower risk than like any futures or options or Bitcoin or something like that. Risk is good. I love risk, but you have to, it has to be balanced out, I think. Kind of like what Ray Dalio says, and I really do believe that, because you don't know for sure what's going to happen. We see that the net income on this deal is, so the net income is, let's see here, let me get it here. That equals 134K. So what this is saying is that, okay, if you bought this property for $2 million, that's what you're going to get, which is 6% on $2 million. And, you have to think about that. Is that a good return? And I'm going to say it depends. It's relative to, your age, your appetite for risk, what you have in your current portfolio. Me personally, I think that it's a low return. I think that for me to probably get involved with it, I would want to see, a cap rate. The current cap rate is capped is at 6.25%. If I was going to buy this, I would try to figure out a creative way on how to get that cap rate to, 15% or more. Okay. And so how are you going to do that? Well, and you have to look at also that you're investing in an appreciating asset. 10 years from now, theoretically, this deal could be worth, $3.5 to $4 million. Usually, real estate does appreciate. Apartments, double every 7 to 10 years. So, but just looking at for right now, the thing that we're talking about is that, when I invest in this and getting a 6% return, one of the things that I was thinking about is there a way to raise the rents, or is there a way to reduce cost? And I really like the deal as far as the property, great location. I was wondering if some of these expenses, I wouldn't need to have a property manager. I have an assistant that would run it, and so I could probably get rid of the $12,500 on the management fee, and that would help a little bit. Instead of it probably changed the cap rate to 7%, 7.25%, which can make it a little bit more attractive. Go back up to the rents real quick. The average rent I think was $1,240. For 14 units. If we could get those to $1,500, that would put you at $250 in revenue. There'll be an extra $40,000 to the bottom line potentially. So, with that, and if we got rid of the property manager fee over here, then you're at $250. Then, that might be a little bit more attractive, because then if we could change the net to, let's just say we raise the rents, and I would go in and raise the rents if it was me. How bad the handwriting is there, but let's say we raise the rents to 1,500, right? I don't know if that's fix that a little bit. I don't know if you guys can read that. Let's say we raise the rents go up 1,500. Okay. And we get rid of the admin fee. So by getting rid of the admin fee, which is 12 grand, and we raise the rents, then we can get a net of, instead of 134, the net would be 250K. So with that, that may make it more interesting. Now, the one thing that you have to keep in mind here, we haven't even talked about the mortgage yet. So you're going to have to most likely get a mortgage on this. I would, and put 25% down. So if you got a mortgage at let's just say, a 30-year mortgage or 25-year mortgage, your mortgage payment, if you're financing 1.5 mil, you're going to have payments of about $8,000 a month, or $97,000 a year. So I kind of want to go through this with you guys so you can kind of see if this deal makes sense. Because if you're spending 100 grand a year on mortgage, minus, that's not factored into this. So then we're going to take a look at that and see if that makes a lot of sense to do or not. So basically, if we go, let's just say that we can't raise the rents, we're at 134K. We'll look at it both ways. 134K net minus mortgage is 100K. So the net is 34K annual. This is not monthly, this is annual. So, and you've invested 500K of your money, right? So if you put up 500K, this is your investment. Okay. And that's what you're getting back every year. Is that a good return? And this is assuming that you can't raise the rents. Is that worth it to you? If you invested 500 grand, that comes out to about a 7% return a year. The thing is that you're invested in an appreciating asset that's going to most likely go up in value. Now, if you can get the 250K minus the mortgage, then your net is going to be 250K. Less 100K for debt equals a net of 150. Okay. So, can we achieve that? That's something we'd have to test the market and see if that was possible. So if you could, then it would be worth it, because then you're talking about 20-25% return. And that would definitely make a lot of sense if you could raise those rates and get rid of some of those costs to make an investment. And so what's happening now is that you have the tenants paying off your mortgage for you. You're not paying the mortgage. You're paying it. You're writing the check every month, but you're not actually having to pay the mortgage off. They're paying it off. It's very high occupancy. I would test raising the rents, maybe spruce some things up, maybe do a couple things for the place to make it look, cooler. Maybe you could add something and kind of reorganize it so that way you could justify higher rents. And then that way you could make more money. So because now if you plug in 500K and you're getting this as your investment, then it'd be worthwhile. The question is that, it all sounds good on paper. What's the reality of it? can you really do that? And that's something that it's yet to be seen. But this right here, investing 500K to get that, that's that's to me is not really the best allocation of money. You should invest, if you own a business, invest back into your business, or if you're at a late stage in life, maybe you want to do that. But it just doesn't seem like the best way to go. If you have multiple options, and it also depends on your skill set. No, the risk side I like, and I love and also in the long term, when the mortgage is paid off, you're going to get that, that 20 grand a month or 18 grand a month, which is nice. And most likely you can kind of count on that because it has a very low risk. So, but I think overall, if I see that I could raise the rents, then I would definitely do that and then make the acquisition. So that's what we're going to work on with this deal and see if we can, purchase it, because it's in our price range of what we're looking for. And, we're also looking for bigger things too, but this is something that we could quickly take down. So I hope that this made sense. And if you guys have questions, message us below and we can kind of go through it if you're looking at making an investment purchase. Remember that we're raising a fund for investing in Houston apartment complexes. So if you ever want to get involved, reach out to us. Angelo Christian, you can follow us on our Twitter, our Instagram, Facebook, and Angelo Christian Investor. If you want to come to the office and talk about making investments in Houston to kind of revive the city and look on building out. I think it's going to be the next 10 years for Houston are going to be awesome. A great opportunity, great timing to get involved. So hope you guys enjoyed this exercise on how to break down a deal to see if it makes sense from the financials. If you have any questions, message me or give us a call. Thank you guys so much. We'll see you soon.